What's up, everybody? Welcome back to another video. Just like I said in the last video, I wanted to make shorter form content on specific topics around Litecoin and Bitcoin. And the goal with these shorter form videos is to make it more digestible. And so today's topic is just going to be an intro to Litecoin, mainly targeted at potential new people coming to the space that Google it out of price rising. And so it'll just be on what is Litecoin. And partially my motivation for making this is that there are so many false narratives, and all of the videos that I saw on Litecoin in the past, these introductory videos, don't frame the value prop correctly. Most of them put a heavy amount of weight onto the idea that Litecoin's uh, differences to Bitcoin, right? That it's faster or cheaper or more efficient, and these are not really even true. The best way to think about Litecoin is as a second Bitcoin chain, right? So like eventually, if this market progresses and develops and there's a high demand for Bitcoin monetarily, you will see not just Bitcoin and Litecoin, you'd see BTC1, BTC2, BTC3, so on and so forth down different value ranges from high value range to very small. Over time. And Litecoin is just the second emergence of a dominant Bitcoin chain. Briefly, let's talk about the differences because some are relevant. So first here, 2.5 minute confirmation time. Uh, so technically the first confirmation that you get from a Litecoin transaction will happen about 4 times faster than Bitcoin. But I think the market kind of misassigns what that actually means. They assume it's just faster, but it's just a faster first confirmation. That first confirmation will hold less weight or less security because there's less energy expended into that 2.5 minute block versus a 10 minute block, assuming even if Litecoin was the same market cap as Bitcoin and the same amount of energy was expended into both chains, you'd still have sort of a 4 times weaker confirmation. So it's not that it's inherently faster. I mean, to get final settlement, which is kind of a debatable topic, but something where you're confident that it can't be reversed. Um, if it's going to take 10 minutes exactly, so one confirmation for Bitcoin, it'd take 4 for Litecoin to get that same level of trust that the settlement is final. So it's not really fair to think of it as faster, but I would say also that because this market's so speculative and these market caps are super inflated for all these cryptocurrencies, that really you can send millions of dollars of Litecoin and get one confirmation and be 99% confident that the transaction won't get reversed. So right now, um, you 2.5 minutes, one confirmation for Litecoin is enough for like 99% of users. There's a lot of excess security on both chains, at least in terms of double spend security. But this topic might become more relevant if these markets develop and if there's high demand and high monetary usage, right? A lot of people are relying on them. They'll start asking these questions. The second difference is in supply cap. Technically, there's 4 times as many Litecoin, but this change is really arbitrary, right? It doesn't make Litecoin less valuable because there's 4 times as much supply. What really matters, I guess, in this sense, is the distribution schedule, and Litecoin's is exactly the same, right? People call it the inflation rate, but I don't like that word because inflation implies tax. That's what governments extract from printing fiat money. This is more of a supply distribution schedule, the rate at which new units are produced, and it's different from a tax like the inflation tax. Um, but that distribution schedule is identical in that every 4 years, Litecoin has a halving, just like Bitcoin, and the new issuance is reduced by 50%. So the rate at which new coins are issued is the same as Bitcoin, even though there's 4 times as many. So the total potential market cap or price for Litecoin is the same as BTC. The supply does not affect that. Um, the third difference here is that Litecoin uses script as its proof of work mining algorithm. This is kind of important because it doesn't compete with Bitcoin miners. So Bitcoin uses SHA-256, and because of that, people mining Bitcoin can't also, like use their mining hardware to go and attack Litecoin. I don't think there's enough economic incentive to even do that, right? If you look at Bitcoin and Bitcoin Cash, they both use SHA-256, and they haven't run into any issues of BTC attacking BCH. I just don't think the economic incentives are there. But at least for Litecoin, you don't have to worry about it because it is a totally different mining algorithm. Um, and the last point on that is script is more memory intensive. So even though it looks like it has a lot lower hash rate than Bitcoin, that's misleading. It doesn't uh, really. If the prices were the same, you'd expect the same total energy expenditure into both chains. Um, and then the last most significant difference is one that happened a few years ago. So the most recent is that Litecoin added this privacy feature called Mimblewimble extension blocks. There's debate within the privacy community as to how good of privacy this really is, but it is an improvement in privacy. And this is the one core component of good money that Bitcoin is lacking. Bitcoin is designed to be permissionless money. What that actually means is people use it in non-permissioned markets. I don't know why this isn't obvious to everyone, but that's what permissionless actually means. If it's used in a permitted market where it's allowed, you don't have to worry about the permissionless features. Right? It's only when it's not allowed that that becomes important, and privacy is at the top of the list for individuals who would be willing to use this, even if there are penalties attached to being caught with using it. So without good privacy, right, the individual risk reward calculation is much different. I imagine this eventually becoming as private as cash, and that if people find that there's very little risk in using uh, Bitcoin or Litecoin, you will see more proliferation of it. So it is very important, and you can check Litecoin's adoption at mwebexplorer.com to see how much this privacy protocol is growing. It's growing a lot in total balance. Transactions are kind of moving sideways. So even though most people focus on these, mostly small arbitrary differences, what's most important to me is focusing on the entirety of the full structure and the security model. And when you do that, you realize it's just another Bitcoin chain. It shares the exact same security model. Its value proposition is exactly the same, right? To protect individuals from censorship and taxation. It's very hard because the casino market's distracting everyone with pumping coins that it's very hard to actually get to the truth unless you're willing to do the work and look at the technology on its own and understand it. But that's the truth. They do the same thing. The only question the market has yet to figure out is why you would need a second Bitcoin chain if you already have BTC. That's what people get confused in, and it's primarily because these entrenched influencer networks have such an incentive to pump their own bags that they will lie to you, or they're not, or they have a totally different set of assumptions that Bitcoin's not actually permissionless, and that it's just going to rely on, you know, governments pumping it and using it. I'll, I would, another video I'll talk about that, but it's totally unrealistic. I think you have to assume that the market sector that adopts this is the market sector it was intended for, individuals resisting governments, not governments pumping and dumping it. Um, but anyways, the reason why, and I've explained this a million times, but I think it's helpful to re-say it. The reason why you need a second Bitcoin chain should be obvious just in this data here, right? There would be no reason Litecoin would be increasing in real transaction volume and users if it was useless. And if the Bitcoin maximalists were right in 2017, saying it would scale through Lightning Network and credit layers, then that would have taken all the adoption and Litecoin would have gone to zero. The truth is, despite hundreds of millions of dollars in funding and tons of influencers promoting these things, the market didn't adopt them. And it won't, right? If it didn't succeed in 10 years, why is it going to succeed now? They were thinking about the wrong market that's eventually going to adopt this stuff. Because they don't understand the whole point of what a permissionless money is and where it would be adopted. It sounds bad in today's political environment to talk about permissionless money and what that really means. But anyways, the whole point is that when Bitcoin becomes expensive, what was perceived as Litecoin's greatest weakness, in that it's just a copy or substitute, is actually its greatest strength, because it's the most similar thing you can get to Bitcoin without BTC itself when BTC becomes too expensive to transact within certain value ranges. So you've seen Litecoin be monetized at value ranges that weren't able to be served by the dominant Bitcoin chain, BTC. And if demand continues, the only path for growth BTC has, because it can't add more transactions, is it can just add higher average value transactions. Sure, it can aggregate in credit layers and settle later, but um, most centralized credit layers won't be able to deliver Bitcoin's value proposition to users long term. They'll be regulated out of existence. And so I struggle to find any source of data that shows Bitcoin isn't just solely rallying on speculation these last 7 years. Right? Median transaction values are still about the same as Litecoins if you separate out all the meme ordinal stuff activity. They say $50, but really it's like around 200, and same with Litecoins at 170. So the demand for permissionless money so far seems like it's in this $200 to $2,000 value range. So if there's not much high demand for permissionless money, high value demand for permissionless money settlement, then Bitcoin can't go up in price. So new users will just adopt LTC. And then the last thing I wanted to show here is just reviewing the coin report that Fidelity put out, and we'll go through this pretty fast. I wanted to show this because it shows how early we are to the real monetization part of this market, where this stuff actually gets utilized for its intended value prop, and why the narratives and this casino has proliferated false narratives. It's almost like the space has gone backwards in terms of understanding, because price has distracted so many people. So Fidelity wrote this report here on Litecoin, and they get some things right, but other things are totally confusing to me. So like I said before, they show that Litecoin's value proposition is aimed at being a more efficient Bitcoin. I mean, that's again not really true. It's the same security model. It scales the same as Bitcoin. Um, it's not really a faster transaction method to Bitcoin. It's another Bitcoin. It's another money. It's not a payment network. It's not like gold and silver, where silver is used. I guess to some extent it is true that, while demand is still low, people are using Litecoin at smaller value ranges. But the same way, like Bitcoin originally, early on, was $1, $10, it was at the same smaller value range. If you take this analogy further, I guess you could say it's like a silver now for Litecoin, where it's monetized at low value ranges, but it can become or turn into gold, right? As demand increases, so does hash rate, so does security, and it evolves over time into a more secure network with increasing demand. I mean, that's just what BTC went through, but people kind of forget that it hasn't always been looked at the way it's looked at today. This point about helping onboard people to Lightning Network, I think that's just an old narrative from like 2017. Litecoin is a store of value. It says just representing price. It's not a store value because the gambling market isn't interested in it. Uh, and they believe that it is likely only one primary digital asset will serve as a store value. This is just inherently false if you have any understanding of monetary economics or monetary history, right? Or just looking at objective properties of money. Like if it is a money, right, and not just a speculative asset, and it gets adopted. Just take Bitcoin for example. Its store value is limited by its ability to exchange that value. Right? A medium of exchange cannot be separated from store value in money. Right? If Bitcoin fees are $1,000 per transaction, it cannot store value for people that need to send under $10,000. Right? People are not going to spend 10%. Well, maybe 10% is the max people will spend. That's a year's worth of investment gains spent on a single transaction. No, it won't. It's not possible. If this is a money that evolves and is adopted, and this speculative casino gets destroyed and it's replaced by real monetization, then these Bitcoin's ability to be used as a medium of exchange will limit its store value properties. It's a monetization limit, right? There are far fewer high value transactions in an economy than low value transactions. And so eventually it will reach this equilibrium where it will lose more low value transactions than it gains in proportional amount of higher value transactions. That's just the way it will scale. It's the way it's already happening, but people haven't noticed because monetary demand is still pretty low. But that's the way it will work. And it can stay stable in terms of real purchasing power. It just won't go up. So you'll eventually see the speculators, which is 99% of people involved in Bitcoin right now, they're not buying it to maintain purchasing power. They're buying it to try to get wealthy. That's why they see all this leverage. They're trying to front run future demand. But they don't know what's going to drive price long term. They've been confused by the economic environment we've in, which has encouraged risk taking, and they've totally forgotten what the whole point of it was. But just like Bitcoin will reach a monetization limit, then the speculative opportunity isn't in BTC any longer. It's in the fastest growing Bitcoin chain, right? Because the upside is just as once people realize there's a monetization limit, another chain can fulfill that demand and reach the same exact market capitalization, right? If demand for this type of money is high enough, that's what will happen. Litecoin will be uh, repriced against Bitcoin pretty dramatically as one, users migrate to arbitrage security for cost, right? Because they don't want to pay more than they need to secure their money. And then two, as this market expands, this demand for permissionless money expands, Litecoin's role will expand, and then all of the speculation should shift. Uh, I rambled on a bit, sorry about that, but I think it's important to explain. This idea that Litecoin can be used as a testnet um, is talked about in here, where it was the first to implement SegWit. Uh, is also sort of an old narrative. We'll skip past that because I want to make this video short. Competitor analysis. I don't agree with comparing a money to credit layer networks. That's like comparing Visa to the dollar. The dollar's market size of market is way larger than any credit layer network. So these aren't competing really long term. And then comparing Litecoin to Ethereum and Solana, I mean, totally two different market sectors they're targeting. Ethereum and Solana are really growing on the casino phase of this uh, market that we're in. But long term, I don't think they really even compete at all for users. They really just compete in speculative demand, right? And that's what so much of this market's driven by. It's like, should I buy ETH or should I buy Solana or should I buy this? It's a popularity contest, and that will die eventually, and the truth emerges after that. Litecoin versus competitor metrics. The average transactions per second are correct. The average value transactions, they didn't realize they included all these double counted transactions from Mimblewimble. So Litecoin looks better than it should on here. if it really had the same average value transaction as BTC, the price would be way higher. I'll talk about in the next video like how to actually value these networks and why some should attract a premium and some shouldn't. But for now, we won't do that. Average fees, these should change dramatically over time. Again, if this market grows, Bitcoin fees can go from an average of a few bucks to an average of $100 or a few $1,000s. But I don't know, just comparing fees of a decentralized network to a centralized network isn't really fair because a centralized network can't do what a decentralized network can do. They're different value props, and you're going to pay more for a decentralized network, but it's because it's the only thing that can resist the high cost of the state money. And so it's this like, it can be cheaper on a relative basis, which is why it would be adopted. Right? If Bitcoin and Litecoin are much cheaper to use than the high cost of state money, then that margin is what will drive adoption. This is actually correct, the hash rate, apples to apples comparison, so good job there. And then how does Litecoin work? It's just the same as Bitcoin. So if you understand Bitcoin, it's the same. Tokenomics are the same to Bitcoin. I don't know why people talk about layer 2 use cases at all right now because the money hasn't even found like a stable market to be adopted in. It's not that large. Usually credit expansion happens after a market coalesces around a single money. Before then, it's too risky. Right? It's hard to add credit layers on top of a money that's so volatile. But eventually it will, if it establishes its place in the monetary market, credit will expand around it. Right now, all the credit layer stuff is just like hype and adding leverage to speculating further, on tokens on top of tokens, basically. So overall, I don't know. The problem I have with these is they don't identify the actual market that this will compete in long term. They don't correctly identify competition. They don't really truly say the underlying value prop and how that'll be realized. And then they're really just looking at this as um, through the lens of old narratives that are mostly false. So this is a company, right? Fidelity's huge, well established, but even they, uh, can't figure it out themselves. So that explains why the market is priced this way and why this is the biggest bubble ever. Uh, because even people are supposed to represent some of the, smarter people within the population can't even get the value prop right or understand what market it competes in. But I appreciate you guys tuning into this video. Again, to summarize, the whole point of this was to talk about what Litecoin is. And the main point that needs to be said is that it is the second dominant Bitcoin chain. The value prop is identical. The only people you'll say argue this are the people that are trying to pump Bitcoin to the moon that say Bitcoin only, right? Because competition is a threat. Um, and that's why they don't like it. But you would not see growing adoption and have the fastest growing rate of adoption, not just from on-chain stats, but confirmed through companies like BitPay, BitRefill, every single crypto merchant processor shows the same trend, right? A testnet and a useless copy does not grow faster than anything else. So that's it. That's what I wanted to say. If you're wondering what Litecoin is and why you need it, that's the reason. Bitcoin doesn't scale, and this is the second dominant Bitcoin chain. The process that's been happening the last 7-8 years will likely persist. Trends likely continue because nothing's changed. And This process can only accelerate. And once the market realizes that, you're going to transition from Bitcoin, speculative premium will transition to Litecoin, like I said. Bitcoin's realized that it has a monetization limit. All the speculation moves on to the second Bitcoin chain. That's the most logical path.